In an era of economic uncertainty, words like crisis, inflation, and bank failures have become alarmingly common. Renowned financial educator and author of Rich Dad, Poor Dad, Robert Kiyosaki, has issued a stark warning. Banks may seize your money in the next financial crisis. While this might sound like a dystopian prophecy, Kiyosaki's message is rooted in historical precedent and current economic trends. The question is, are you prepared? Today, we'll break down Kiyosaki's warnings, explore why this crisis could be different from anything we've seen before, and provide actionable steps to protect your wealth. Let's dive in. The warning, why banks may seize your money. Kiyosaki's warning isn't just speculation, it's based on real-world examples. In 2013, during the Cyprus banking crisis, depositors woke up to find their bank accounts frozen. Wealthy individuals lost up to 40% of their savings as part of a bail-in measure where banks used customer deposits to stabilize themselves. This wasn't an isolated incident. Similar scenarios have played out in Greece, Argentina, and other countries facing severe financial crises. Kiyosaki argues that the global financial system is fragile, propped up by massive debt and unsustainable monetary policies. Central banks around the world have been printing money at unprecedented rates, leading to inflation and currency devaluation. When the next crisis hits, governments and banks may resort to extreme measures, including seizing deposits, imposing withdrawal limits, or even banning cash altogether. The key takeaway: your money in the bank isn't as safe as you think. Why this crisis could be different. Unlike previous financial crises, the current global economy is facing a perfect storm of challenges: skyrocketing debt, geopolitical tensions, climate-related disruptions, and a loss of trust in traditional financial institutions. These factors make the next crisis potentially more severe and widespread than anything we've experienced before. One alarming trend Kiyosaki highlights is the rise of digital currencies and central bank digital currencies, or CBDCs. While digital currencies promise convenience, they also give governments and banks unprecedented control over your money. Imagine a scenario where your digital wallet is frozen because of new regulations or penalties. Without access to physical cash, you'd be entirely at the mercy of the system. Additionally, the erosion of privacy and increasing government intervention in personal finances means that your assets could be targeted in ways you never anticipated. For example, policies like wealth taxes or mandatory contributions to failing pension systems could further erode your savings. Kiyosaki's warning is clear. If you don't take action now, you could lose everything when the system collapses. How to protect your wealth. So, what can you do to protect yourself from this impending crisis? Kiyosaki offers several strategies to safeguard your wealth and ensure your financial survival. Here are the most critical steps. Step 1. Move your money out of traditional banks. One of the first actions Kiyosaki recommends is reducing your reliance on traditional banks. Instead of keeping large sums of money in savings accounts, consider diversifying into safer options like precious metals, cryptocurrencies with caution, or even offshore accounts in stable jurisdictions. Physical assets like gold and silver have historically retained their value during times of crisis and are less vulnerable to government seizure. Banks operate on a fractional reserve system, meaning they don't hold all the money deposited by customers. In a crisis, this can lead to bank runs, where people rush to withdraw their funds only to find that the money isn't there. This is why Kiyosaki emphasizes the importance of limiting your exposure to traditional banking systems. By moving your money into assets you control directly, you reduce the risk of losing it overnight. Another option is to explore decentralized finance, or DeFi, platforms, which allow you to earn interest on your assets without relying on traditional banks. While these platforms come with their own risks, such as volatility and regulatory uncertainty, they offer an alternative to centralized financial systems. Just ensure you understand the risks before diving in. Finally, consider geographic diversification. If you live in a country with unstable economic policies, it may be wise to store some of your wealth in foreign currencies or assets located in more stable regions. This could include opening accounts in countries with strong banking systems or investing in international real estate. The goal is to spread your risk and protect your wealth from localized crises. Step 2. Invest in tangible assets. Kiyosaki emphasizes the importance of investing in tangible assets, things you can touch and hold. Real estate, farmland, and commodities like oil or agricultural products are excellent hedges against inflation and currency devaluation. Unlike paper money, these assets have intrinsic value and can generate income even during tough economic times. Real estate, for example, can provide rental income while appreciating in value over time. Even during recessions, people need places to live, making residential properties a relatively stable investment. However, it's important to choose properties wisely. Look for areas with growing populations, low crime rates, and strong job markets to maximize your returns. Farmland is another underrated asset class. As the global population grows, the demand for food will continue to rise. Owning productive farmland not only provides a source of income, but also ensures access to essential resources. You can lease the land to farmers or use it yourself if you're interested in agriculture. Commodities like gold, silver, and oil also play a crucial role in protecting your wealth. These assets tend to perform well during periods of economic instability because they are universally recognized as stores of value. By diversifying into commodities, you create a safety net that shields your portfolio from market volatility. Step 3. Educate yourself financially. Knowledge is your greatest weapon in any financial crisis. Kiyosaki stresses that understanding how money works, how it's created, controlled, and manipulated is essential for protecting your wealth. Read books, attend seminars, and follow credible financial educators to stay informed about the latest trends and strategies. Start by studying the history of money and banking systems. Books like The Creature from Jekyll Island by G. Edward Griffin reveal how central banks operate and why they often prioritize their interests over those of the public. Understanding these dynamics will help you see through the noise and make informed decisions. Next, focus on learning about different asset classes and investment strategies. For example, understanding the difference between stocks, bonds, and real estate can help you allocate your resources more effectively. Online courses and podcasts are great resources for expanding your financial literacy without spending a fortune. Finally, surround yourself with like-minded individuals who share your commitment to financial education. Joining investment clubs and forums can provide valuable insights and keep you motivated on your journey to financial success. Join investment clubs, online forums, or local meetups to exchange ideas and learn from others' experiences. The more you immerse yourself in financial education, the better prepared you'll be to navigate the coming crisis. Step 4. Build multiple income streams. Relying on a single source of income is risky, especially in uncertain times. Kiyosaki advises building multiple streams of income to ensure financial stability. This could include starting a side business, investing in dividend-paying stocks, or creating passive income through real estate or intellectual property. A side business doesn't have to be complicated. For example, you could start freelancing in your area of expertise, selling handmade crafts online or offering consulting services. The key is to identify a need in the market and provide a solution. Over time, this side hustle can grow into a significant source of income. Investing in dividend-paying stocks is another way to generate passive income. Companies that pay dividends distribute a portion of their profits to shareholders regularly, providing a steady cash flow. Look for companies with a strong track record of consistent payouts and solid fundamentals. Finally, consider creating digital products like ebooks, online courses, or software tools. Once created, these products can generate income indefinitely with minimal ongoing effort. The internet has made it easier than ever to reach a global audience and monetize your skills. Step 5. Avoid debt like the plague. Debt is one of the biggest threats to your financial security, especially during a crisis. Kiyosaki warns against taking on unnecessary debt. such as credit card balances or personal loans, which can quickly spiral out of control when interest rates rise. Instead, focus on paying off existing debts and living within your means. Credit card debt, in particular, is a ticking time bomb. With high interest rates, even small balances can grow exponentially if left unpaid. Prioritize paying off high-interest debt first, and avoid using credit cards for non-essential purchases. If you must borrow money, make sure it's good debt that generates income or increases your net worth. For example, taking out a mortgage to buy a rental property could be considered good debt as long as the property generates positive cash flow. Always calculate the return on investment before committing to any loan. Finally, adopt a mindset of financial independence. Instead of relying on loans to fund your lifestyle, focus on saving and investing. Building a strong financial foundation will give you the freedom to pursue opportunities without being weighed down by debt. Step 6. Stockpile essential supplies. In a severe financial crisis, basic necessities like food, water, and medicine may become scarce or prohibitively expensive. Kiyosaki suggests stockpiling essentials to ensure your family's survival during turbulent times. This includes non-perishable food, clean water, medical supplies, and even tools for self-sufficiency. Non-perishable foods like rice beans, canned goods, and freeze-dried meals have a long shelf life during shortages. Rotate your stockpile regularly to ensure freshness and avoid waste. Additionally, invest in a reliable water filtration system to ensure access to clean drinking water. Medical supplies are equally important. A well-stocked first aid kit, prescription medications, and basic healthcare items can make a huge difference in emergencies. Consider taking a first aid course to prepare for situations where professional help may not be available. Finally, think about tools and equipment that can help you become more self-sufficient. Items like gardening tools, solar panels, and generators can provide long-term benefits. The goal is to reduce your dependence on external systems and take control of your survival. Step 7. Stay liquid and flexible. Finally, Kiyosaki advises staying liquid and maintaining flexibility in your financial strategy. This means keeping some of your assets in cash or easily convertible forms so you can act quickly when opportunities arise. However, avoid keeping all your money in one place. Spread it across different asset classes and locations to minimize risk. Cash is king during a crisis, but it's important to strike a balance. Holding too much cash exposes you to inflation risk, while holding too little limits your ability to seize opportunities. Aim to keep enough liquidity to cover 6 to 12 months of living expenses plus a buffer for emergencies. Flexibility also means being willing to adapt your strategy as circumstances change. For example, if the housing market crashes, you might find opportunities to buy properties at discounted prices. Staying informed and agile will give you a significant advantage in navigating the crisis. Finally, review your financial plan regularly and adjust it as needed. The economic landscape is constantly evolving, and what works today may not work tomorrow. By staying proactive and open-minded, you can position yourself to thrive in any environment.